Hello everyone, welcome to my YouTube channel. In this particular video, let us discuss the important section B questions from the chapter 3, that is primary market. The subject name is financial institutions and market. So first one, they may ask the functions of primary markets. What are the functions of primary market? First one is origination. We all know that in primary market we issue new shares for the first time. So the public limited company issues its shares for the first time in the primary market. So the shares are getting originated in the primary market. Next is underwriting. What is this underwriting means? The underwriters are the institution which will take the guarantee of selling our shares to the investors. They will give us the 100% assurance that they will sell all our shares to the investors. So that is the function of primary market. Next, distribution. Primary market also deals with the sales of debentures. Even the task is performed by the brokers or the underwriters. So it facilitates even the sale of debentures. Next is household savings. Now, company if it wants to raise the funds, so it will issue the shares in the initial public offering. Then the company can get the capital. So it even facilitates the household savings. Household, even the investors can say invest all their savings in the shares and get the higher returns on their investments. Next is global investments. So what happens? Even the business can issue their shares in the foreign stock exchanges. Even the investors can invest in the foreign stock exchanges. So this is not this market is not limited to only India. Even the investors can issue the shares in the global stock exchanges or foreign stock exchanges. Sale of government securities. One of the important function of primary market is that even governments also, when it wants certain money to fund the public project, suppose it is constructing a road, constructing flyovers, metros and all, it wants huge amount of money. So when it wants a huge amount of money, so it will issue the securities to the public in order to get all these funds. So to get these funds, even the government will also issue its securities. These are the functions of primary market. Next, let us discuss about the instruments in primary market. What are the instruments used in primary market? First one is stock. See, stock is a unit of ownership. For example, equity shares. So equity shareholders are the owners of the company. So equity shares. So when you buy the equity shares of the company, you have the voting rights. You can vote in the annual general meeting of the company. So it is like you have acquired a unit of ownership. So even you are a owner of the company. That is the stocks are the first instruments. Stocks are the capital of the company is divided into single unit, that is stock. Next is equity shares. So the equity shares is one of the stock. Next, bonds. The bonds are issued by both government also as well as the corporations. Corporations are the institutions which requires money. So both the government as well as the corporations, they issue these bonds. So they will get returns and principal amount at the time of maturity. So what happens is, uh, when you're buying the stock bond, you would have given certain amount. That amount is a principal amount. At the time of the maturity, along with the principal amount, you will even get the returns, interest on that, or the dividend on that interest. So you're getting both principal amount as well as return on your investment in bonds. It is for short term again. Next is currencies. So currencies are the amount used for transacting goods and services. So government will issue certain currencies. So buyer will invest in these currencies and buy that currencies, so that when the currency exchange rate is high, they will exchange this and he will get a benefit out of that. He will have the more amount as a returns. So what happens when the price of the currency is less, they will purchase it. When the price of the currency is more, he will sell the currency in order to have the price benefit. Next is spot commodities. These are all the physical commodities. Physical commodities such as the metals, the grains, everything. Normal commodities. So even the investors will buy this, make thinking that in future it can make the profit out of this. So investors will buy this commodities for having the price benefit in the future. This is about the instruments of primary market. Now let us discuss about the advantages of primary market. That is also next question which might be asked. What are the advantages? First one is low cost. See, while issuing the shares in primary market, the company need not have brokers. Brokers is not required in the primary market. So the cost for brokerage commission and all will come down. So it is a very less cost for the company. Next is it can be converted into cash at any time. So what happens is, uh, suppose in the primary market, today I purchase the shares and tomorrow I can sell off the shares. So it is highly liquid. So all the securities can be easily converted into cash. Securities can be easily converted into cash. Next is helps in mobilization of savings. So investors, they whatever the amount they have saved, those amount they will invest in various financial securities. So their savings is not kept idle. In fact, their savings are mobilized. So the primary market helps in mobilization of savings. Next, less price manipulation. So what happens? The prices of the shares issued in the primary market are determined by the company itself. The management of the company decides the price of shares in the primary market. So there is less chances of frauds or manipulation in the primary market. Next is potential avenue for diversification. So investors can reduce the risk. Investors can mitigate the risk by investing in various types of investment securities. There is no compulsion that they should invest all their money in a single security. There are n number of investment plans. So there are many financial securities available for the investors to invest their money. So there's a potential avenue for diversification. In the diversified field, they can invest their all the money. Next, not subject to any market fluctuation. As I've already told that the prices of the shares issued in the primary market, okay, it is predetermined by the management of the organization. So management of the organization predetermines that. So what happens? Nobody can make any fluctuation in the prices of the shares. So this will prevent from the market fluctuations. These are all the advantages of the primary market. Next, let us look into the one more important question, that is disadvantages of primary market. Disadvantages of primary market. Limited information for an investor. As a company's first time it is investing in the initial public offering. So initial public offering, that is in the primary market. So there is very limited information the investors knows about the company in the primary market. So this is one of the disadvantage for investor. Next is risky. See, what happens is in secondary market, you know about the company, you know about the historic trading. You may ask the opinion of the previous trader. But in primary market, it is the shares are issued for the first time. You are purchasing it for first time before nobody has purchased that. So there is no historical data available about the shares issued by the company because the company is issuing the shares for the first time. So it is very risky because you may undergo loss because you don't know about how the company is actually. So you may undergo certain losses also. Next, not favorable for small investors. So what happens in IPO? N number of uh, subscribers will subscribe for the share. N number of applications they will receive. So what happens if you're a small investor? If you buy one or two applications, if you have taken, there is a less chances that the shares will get allotted to you. So for small investors, primary market is a bit disadvantageous. So these are all the expected questions from the primary market third chapter. So there are totally 4 questions I have discussed. Hope you have understood all these 4 questions very well. I hope that you people have no doubt. So if you have no doubt, any doubt, you can put your doubt in the comment box so that I'll respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next video by giving you the important questions that might come in section B from the fourth chapter.